It was a relatively flat day in the market with the SPY up 0.13%, closing at 587.59. The market took a little bit of a breather as we have entered into this zone that has been a previous resistance zone, basically between 585 and 600 on the SPY. This was an area where there was a lot of churn at the end of last year and into the beginning of 2025. So we're entering into this area once again. The gamma exposure has been very large, basically between 580 and the 600 strike on SPY, and this corresponds to the 5,800 and 6,000 levels we've been talking about on SPX. The purple bars on our chart here represent gamma exposure data on an absolute net basis. We're starting to see a little bit of gamma exposure growing above the 600 strike now on SPY. This previously had been very, very small, so this is starting to grow a little bit larger. We're starting to see a little bit of volume creeping in here in the options market. And I just wanted to contrast that with the SPX chart. Gamma exposure is not as large above the 6,000 strike. We're seeing some pretty decent volume coming in here at that level. But when we compare SPY with the SPX, we're not quite seeing the same enthusiasm above the 6,000 strike. So a little bit more enthusiasm, perhaps in the retail segment of the market versus the institutional segment with respect to this comparison between the SPY and the SPX itself. We remain in positive gamma exposure territory, however, across the major indices. And if we just take a look at our weekly GEX data, this is actually important because we have OPEX, the monthly OPEX, ending this Friday. So if we take a look at the weekly GEX data, that's going to give us all the contract data up until this coming Friday. We can see the largest gamma exposure concentration is at the 5,900 strike for this week. So we may be coming into a little bit of a resistance level here at 5,900. So it wouldn't be surprising to see some consolidation or potentially a pullback down to this 5,800 level. We've been talking about this for a couple of days in our community Discord. You guys should definitely check that out when you get a chance. I'll put a link in the description below. You can check that out for free.
Thanks, Anthony. Some interesting developments with IWM, the small caps. We closed today at the lowest price since the gap up going back 3 days, and we're almost to this whole moving average at 205.56. Kind of interesting. Actually not surprising that we rejected from the 210 area, given that that is and was the largest GEX cluster. Now, one of the interesting observations that I'll make is that the last day or two, we did see higher volume between 195 and 200. And I noticed today that the GEX at 200 has grown, and we're seeing in general these lower strikes are now a little bit more significant relative to the GEX at 210. This is also reflected in this fairly sharp reduction in GEX on IWM, where we went from positive 151 million 2 days ago to negative 311 million today. So IWM has definitely taken a short-term turn toward the negative with interest in lower prices at this point, but we still see an overall bullish picture that has developed. So even though some signs are pointing toward a pullback immediately, I still think that's probably going to be a buying opportunity, and there's a good chance that we continue toward those higher strikes, just like you were mentioning with SPX and SPY.
Thanks, Sean. Next, let's take a look at the Qs. The Qs up 0.6% today, closing at 518.68. The move over the last 2 months in the Qs has been quite a bit sharper, both to the downside and to the upside than what we're seeing on the S&P. It does appear we're reaching more of a resistance zone on the Qs up here with less space to go. We can see our upper dealer cluster zone is situated between 525 and 530, and we also have large gamma exposure at the 520 strike. So maybe a little bit more room, maybe 1% or so left based on current resistance. And so this could be an area where we see heightened dealer selling pressure as we approach these major levels. In our community Discord, we've been discussing a number of different ways to take bearish positions on a short-term basis just to capture a potential retracement in the market. So for example, on the Qs, one of the ideas that we're considering putting on is potentially a 500 490 put debit spread on the Qs, and this is a very short-term play expiring next Friday, so that gives us about 7 trading sessions from today. So if you're looking for a pullback potentially to fill this gap, this 500-490 put debit spread actually looks pretty interesting. As of the close today, that was going for around 80 cents, 81 cents, something like that. And so that actually gives you over $9 in potential profits if we do get some sort of pullback. As I mentioned, we do have the monthly OPEX for May coming up this Friday, and a lot of times this can serve as a turning point for the market. And so if you think this rally is overdone, that's a potential way to play for a near-term retracement.
Moving over to the VIX, this was the second day in a row that the VIX painted a green candle, and we did see a slight positive shift in the overall GEX picture. Especially noteworthy was the volume coming in at 42.5 and at 47.5, and 42.5 is still the upper dealer cluster zone. So I'm not expecting 42.5 to hit anytime soon. This in and of itself is not going to be a predictable event, even if we do reach 42.5. But just the overall picture is one of caution. Since we're in the lower dealer cluster zone, there's a lot of congestion between 16 and 18, given the size of these GEX strikes. And we'll need to keep an eye on this as we head toward VIX expiration, actually a week from today. So one quick point on the 2-hour chart for the VIX, which shows that we are above the whole moving average. The whole moving average is rising as well. It appears that the 2-hour chart shows that the VIX has room to 21, as long as, in my methodology, as long as we hold above the whole. And if we look at the 4-hour, it shows potentially room to 23 or a little higher, which actually matches with the zero GEX level. So kind of interesting potential targets in the event of a continued pullback. Now, the 4-hour hole being this far away, at 17.5 compared to the price being at 18.5, there's a very good chance sometime in the next 2 days we may see the market attempt to move higher again and see the VIX pull back. But as long as we're above the hole, I view this as a long volatility trade with fairly good short-term probabilities.
Next, let's take a look at an individual name that we've been tracking recently, CrowdStrike, trading at 435.94. There's a large gamma exposure concentrated at the 450 strike. That's been sitting there for quite a while, and this actually matches up with a previous high. Recently, we've seen 2 attempts at this 450 strike. And we also see gamma exposure growing all the way up to the 500 strike. Now, Crowd has earnings coming up on June 3rd, so that is something to be aware of. However, one key level that we are watching is this 395 to 400 zone. It's also the 50-day EMA, currently sitting at 396.90 and rising. So any pullback that results from a move heading into earnings or even after earnings down into this 395 level looks like an interesting support. We like to position ourselves in pullbacks to get better pricing, but as long as the gamma exposure remains between 450 and 500, this looks like a potential move in the coming months up into this zone. So that's something that we would be watching for. We typically try to avoid earnings plays, but this is something that we're watching here in the coming weeks for a potential move up into some of these higher strikes.
Let's take a look at Kroger, a defensive name in the grocery sector. Kroger's been in an uptrend since June of last year, and we actually recently called this move from the mid 60s or high 60s over 70. That ended up working out pretty well, but we've actually now dropped all the way down to the lower dealer cluster zone and also near the lower Keltner channel, with Kroger still showing positive GEX and this very large GEX cluster at 70. This really catches my attention given the year-long uptrend for the stock. The volume today was noteworthy at 80 on a relative basis, and we have some GEX at 75 worth watching. Now, they do report earnings sometime in the next 30 days, so that's something to be aware of because earnings can introduce some uncertainty that GEX doesn't necessarily predict. But I definitely like buying stocks in an uptrend on pullbacks. And this is a name that bucked the trend when the market was dropping. And now that it has dropped, it looks constructive to me.
And guys, we're currently running a special promotion, $300 off our yearly portfolio manager tier subscription. Use code May2025 at checkout. We've got a few spots remaining, but this promotion ends in a few days. So definitely take advantage of that while you can. Members get access to our gamma exposure dashboard, our algorithmic trading strategies, as well as our vibrant community Discord. Our Discord community has a ton of great traders sharing their own trade setups and strategies, and you can also follow along with our trades in real time as well. I'll put a link in the description below so you guys can check all of that out when you get a chance. Thanks so much everybody for watching, and we'll see you guys in the next video.